us out.
And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report. We've got a big full crew here today. Coach Noah, Coach Mark, Coach Cody, and myself, Coach Tim here at Tackle Trading. Noah, let's start with you, my friend. How are you doing today?
I'm awesome. Had a good lounge this morning with a bunch of good people. We covered some good stuff, helped some people out. It's cool.
Dude, Lounge Live. I saw that in the chat yesterday. I love that hashtag, Lounge Live. I think old Coach Blake out there in New Jersey was talking about that. Mark, you're here. You're ready to rock and roll. I know that you've been talking to some of our community and students here this morning as well. But how are you doing, brother?
Good. We do have a phone number. As we grow up as a company, as we get bigger, every passing week, it seems, we're always thinking of ways to improve. And my brother, Tim, said, we need a phone number. It was about time. And so I answered, so I want to thank Tim now for adding, 2.5, 3 hours to my workday. Now, here's the thing. I enjoy customer service. It's one of the reasons I do it at Tackle Trading. I like helping people move from point A to point B on whatever the problem is. But I have less time to analyze my fantasy football teams.
Well, it's a good thing that you're a theta trader who's just a lazy cash flow trader.
It is.
That doesn't take hardly any of your time, which is what I love about the way you trade. I mean, and I think there's a real lesson there, Mark, in the way that you've evolved as a trader over the years, because you used to do a lot more day trading, when you started trading.
It's about lifestyle.
And now you just like you like dividends, you like conservative companies, you want to pick up cash flow, naked puts, boomerang, and that way you can do all the other things.
I mapped out a 25, 30-year plan that if I cash flow at this percentage, I will get to my destination that I want to do. Put in reasonable numbers, stay active, monitor those areas. It's something that you said, Tim, that I have just loved. It is the favorite thing I've heard all year when you said, get rich slow.
Mm-hmm.
And when you said that, I was like, I had to ask you, I was like, did you come up with that? Because I couldn't remember ever hearing it anywhere else. And you're like, yeah, I did. And I was like, I love that. And that is something I've incorporated into my own personality. So
I think there's a real good lesson there out there. Halftime crew, by the way, welcome out as well. But it's about reasonable expectations. You got to have goals, you got to have numbers, things have to make sense, but you have to have SMART goals as well. Specific, measurable, action-oriented, realistic, the R there, and time-bound. I like a 25-year goal too, Mark, because then you don't get worked up in the short term, the trade war, this and that, whatever it is. I mean, you're just running your portfolio based on your expectations, your goals, and what you want to accomplish. We'll get to that here in just a minute as well. Cody, very, very good to have you as always here. Forex 101 coming out here really, really soon. I think we got a target date for the end of the week. Is that right, Cody?
I believe so. I know that all the videos are done, all the write-ups done, quizzes are in there. We're just working on putting together a nice little bow, and then it's out. So it will be out this week. And that's not my fault if it's not.
Yeah. Other people, pass the buck there. I like that. No, we're a team. We got other people working on components. We'll get it done. But before
that was really just because Matt was giving me such a hard time yesterday. Hey, I've done my part. I put in my 2 cents. I put in my hours.
He'll continue to give you a hard time. Don't you know, Matt? No matter what, he'll find a way to make sure he gives you a little rub in the ribs there. Make sure you're working hard. Noah, though, before we talk about Forex 101, you've got something up in front of you I want you to explain. Because if you're out there and you're a pro member, by the way, thank you and welcome. But we've got an announcement here today. Noah, we got a playbook on our website,
Yes, we do. And it's not just any playbook, Tim. It's the Tackle Trading playbook. And it's awesome.
I think it's amazing.
Like when I, dug into this and, I worked on the project the whole way along and, just seeing the finished product, it's really impressive. Really thrilled to be able to show it to people. So Tackle Trading playbook. I believe we are ready to go live with this. You'll be able to log into it from the Trade Center. You go up to the Trade Center tab and click on that, and it opens up the playbook. And then you've got 3 core playbooks for directional trading, for cash flow trading, and for volatility trading.
Yeah.
And it's really laid out pretty, in a really neat way where you can come down and, I'm kind of zoomed in on it. I'm showing my browser scaling is pretty big on this right here, but you can see.
Pick one randomly here. Let's test it.
Well, okay, let's go with the call leaps, right? I'll just pick that one there. Poor boy covered call.
Okay, so intro, disclaimer.
Yep. And then
hello traders, and welcome out to the Tackle Trading Playbook. Today's discussion is going to focus on the call option, specifically leaps call options.
Beautiful.
Now, leaps is a heck of an acronym, actually. Kind of an interesting acronym, a bit of a stretch if you.
But you get the idea, right?
Dude, that's amazing. And by the way, there's a little download button on each one that has the PDF version of how you're going to play that playbook based on tackle trading rules. And guys, we have volatility trades, we have theta trades, we have delta trades based on the option Greeks. It's kind of how we think as traders. And I got to tell you, go and use the playbook. Just in the chat here, guys, just put in hashtag team tackle, because that's why
I don't know how many teams share their entire playbook. I don't know. I mean,
why not?
Why not? Football team, we're just
we're not competing with each other. We're
competing I know, against the market. I know, and that's what I'm saying. How great it is that our entire playbook. Here you go. For anyone who's on our team, you get our playbook.
Yeah, no, this is actually out there on the site here today, Jonathan. If you're not seeing on site, you might want to do a force reload of the website or something like that. It should be. And Noah, go show the menu again real quick.
So menu.
Yeah, you might need to log out, log back in, or even clear your cache, but it should be right under
the Trade Center.
Up under Trade Center.
Trade Center, and then Tackle Trading Playbook. There's also a glossary in the journals there. So it's in the sub menu under the Trade Center. Yep. Oh man, yep. I'm fired up.
There's a little bit better view of it. You can see it. My other browser shows it a little bit differently, but yep. Trade Center, Tackle Trading Playbook. And then you can download each playbook like entirely, or you can download them individually. So if you click on the download Delta playbook, you get the whole playbook. If you download the PDF for each segment, you get just that segment. And I mean, it's just beautifully done.
Yeah.
That Delta playbook, the Theta playbook, it's got all the rules, all the details. And it's the same stuff we've been covering in, the coaches show, just in detail. It gives you that nice, I don't know. It's just an awesome playbook. It helps you match it up. This is very similar to what we were doing in that in my options report this last week, where you can gauge, the bullishness of the strategy. They've got the ranking right here. 0, +2 on the bullish scale. That would be good for a covered call. That'd be good for a naked put, so on and so forth.
Yeah, I love it. I'm excited about it. Enough patting each other on the back, though. If you're out there and you remember, go use it and let us know if you like it or not, and give us some feedback. I'm excited. I think you guys are going to love it. I know that you will, and it's going to bring a lot of value to our traders out there.
And we are never going to stop creating value for our members.
That's right.
And I'm not using hyperbole when I say this. As educators, we believe we have a sacred responsibility in passing on our knowledge, in doing the best we can. Sometimes we do good, sometimes we're limited because we're human beings, but we continually are going to strive to add value and do things for our pro members. We love our community.
Yeah,
we love our community.
Well, because trading can be easy, but trading can be hard too. And we know that, which is why we created Tackle Trading, to help each other out and to grow and to learn together. And now we've got the veterans in place to help the beginners come up and build their skill sets. There's no doubt about it. And then even when you are a veteran, now you can just use the reports, for efficiency and saving time. So Mark, you can go and do all those fantasy football analysis things. We've already bird dogged all the picks and stuff, but then stuff like this, I just get fired up about it. I love this stuff. And I love those playbook plays. Video on each one, PDF on each one. Go and learn your rules, guys, and make sure you're using the content though. But we got to kick this thing into gear and go look at the market. Let's start with the S&P 500, the overall broad stock market here. You know, obviously we've had volatility this last couple of months as it's gone back and forth. Now we're pressing up against resistance. Doji candle, not much going on today, Noah. Perfect day for Theta Wednesday. What's your read on that chart?
Well, you've got a little tiny inside candle today that's just been loitering up near yesterday's close. So we're not too far off yesterday's
Did you say
close.
loiter again? There, for
Yes,
some reason, I like how
loitering.
you say
It's
loiter.
kind of fun, right? Loitering.
But I like how you say loiter.
I don't know, with my strong Utah accent, it's gonna sound funny to some people, I'm sure. But check out that resistance out there, 30-20 zone, big fat resistance. So I think it's natural for the price to slow down as it approaches resistance. The other thing I'm noticing, Tim, is the volume's dropped a bit. So even though we've had the upward movement in price and it kind of hanging out in there, the volume's been tapering off a little. And I don't know, whenever I see the stock chart up against resistance like that, I always think to myself, well, you go first if you buy it. See how that works out for you.
Sure. Yeah, like a couple of kids at the top of a hill with their bikes, right? You go first. Let me see
You
how
go
it works out.
Yep.
Yeah, you don't want to be before the breakout here. You're not going to buy before you get technical confirmation. But even upon technical confirmation, I would be very hesitant because we're only in the very, very beginning stages of earnings season. Mark, we've had a little bit of a V-shaped rally on the daily candlesticks. Kick back to a weekly candlestick. Make Mark happy here on a Wednesday. And Mark, that is slowing momentum up there on the top. Now, when you're in a long-term uptrend and you're above moving averages, the pivot relationship's changing like this. Does it make you cautious? Do you just wait for a breakout? How are you approaching this, Mark?
Well, listen, technicians, which we all fancy ourselves as to some degree, I mean, we see a couple things here. One, we see that there's an area of resistance. And two, we see that with that area of resistance, we have those kind of like swing lows rising a little bit. You've drawn a line, or Cody drew a line. Somebody drew a line, kind of illustrating that. I mean, when you see this general type of pattern, Noah, I mean, does it tilt you a little bullish?
Well, it's got a bit of an ascending triangle to it.
Yeah, it
right?
does, doesn't it? I mean,
Yeah. And it does. I mean, I do have to say overall, the market's still, bullish. It's been really neutral the last little bit, chopping sideways, but those lows do keep getting higher. And I think that does tip its hand, towards bullishness.
I mean, obviously you have to break resistance. And when you're right up against resistance, wait for that. But it feels like a market from a technical perspective that just has that little bullish edge, a little bullish tilt. If you get a positive week of earnings coming up, where you got a lot of the big companies coming in, I mean, I've been saying for months that it needed a catalyst, needed something. There wasn't, absence of bad news is not good news.
Mm-hmm.
And if it gets a little spark, earnings can always do that. That might be that little spark for all of those talking heads on TV to say, hey, we're at all-time highs.
Correct. And if we are at all-time highs, I mean, you have to be bullish in the market. How you trade that, whether it's aggressive or moderate, or you stay on the sideline waiting for a better signal, that's one thing. But I can't imagine a bearish delta here, guys. I mean, I could imagine an argument waiting for more clarity, staying in cash, all that kind of stuff. But could you paint a picture where you're betting against this trend in the market right now?
Only if you've got staying power, meaning you could be short and stay short and endure whatever run against you. But most people don't have that kind of staying power, because the market can stay bullish longer than that bear could stay liquid.
The markets can stay irrational longer than you can stay solvent.
What's the bearish macro case?
That we're at the back end of a 10-year bull rally that's based on lies and fake money that they've created.
Okay, I've been hearing that for years.
So that's the case, though. I mean, it's not really changed. That still is the argument, is that you're at the back end of a big, big rally, that there's no reason why it should be going up, that the Fed is lowering interest rates in the face of economic stagflation. You've got global economic slowdown. You've got a recession.
Zero head.
In
when
Europe.
did zero hedge just?
You asked me to make the case. That's the case. All right. It's an easy case to make. You don't have to be that great of a linguist to make that argument, and anybody can make it. So
I've just been hearing that for years.
I know. And people who ascribe to that have missed out on a 10-year bull rally, Mark. See, that's the problem with where my head's at right now. I understand being cautious in front of resistance, but if it breaks out, you have to buy, don't you think?
You go first, Tim.
Oh, all right.
Well, I mean, if nothing else, I guess once again, being a little bit cowardly, because it's not that everything you've just said I've heard in coffee circles and articles and this and that. In our inner discussions, we talk about how crazy it is. Like tilting towards, positive theta bullish cash flow, I think is a nice coward's way. It's how I've approached the market all year. Nice coward's way to take advantage of upward momentum.
Yeah, but even cowardly picking up a couple of shares of, say, like a McDonald's or a Procter and Gamble or a Walmart after
Picked up
earnings.
a couple McRibs last night.
There you go. I mean, there's some things I'm still interested in. I'm not adding a bunch of Delta today. It's a doji here today. Let's break back down into
Mark's McRib purchases have caused the little rally in McDonald's stock price today.
Listen, but isn't that how it works? Listen, the McDonald's next to me gives you a second McRib for $2 with the purchase of any value meal. All right, but think about this. Okay, I know we all have a lot of fun at how much I love.
Excuse me.
But didn't you show me a video?
Yes.
Yeah.
But think about this from the evaluation of a company standpoint. Like when you know a company and you know when sales come in and you know that company and its dynamics, I mean, are you going to be surprised to see McDonald's revenue numbers up? Like when after this quarter?
Will the McRib propel McDonald earnings? I hope not. I don't see that. I don't see everybody. I went and had one McRib. Do you think that's going to be the reason why McDonald's rallies?
Now you think about millions and millions and millions of people having one McRib, what that can do to revenue.
Yeah.
Now imagine millions of people having 17 McRibs like myself.
Yeah.
I'm just saying these things like.
And actually, it's not just the McRib. If the McRib brings them back to McDonald's, they haven't been there in months, and then they also get fries, a Coke, and
You mean they supersize their value meal? Hey, it's a good way to pay with supersizing your value meal. Theta trades.
That's right. That's right. That's right. Sell options against McDonald's. There's no doubt. A little leap cover call there, but you got earnings coming in here. I do like that kind of strategy on a company like McDonald's. Back on the markets here. We'll come back to stocks in a minute. ES, YM, NQ, RUT or RTY. Noah, give me a quick look at all indexes.
Okay, so we got to take a look here at the Dow. Dow is pretty darn close to that resistance zone. Just again, right below it. Very, very similar to the S&P. I mean, almost. They obviously look like siblings there. They're so similar. The NASDAQ, let's take a look at that. That's got a little bit more, I think, energy behind it, and it's right up knocking on the door. So it's already at the resistance zone. I think it's poised for a breakout. And it's got a little bit more of that cup and handle kind of look to it, where I could see, tech breaking. And, the NASDAQ's really heavy in tech, and tech sector tends to be one of the stronger sectors in the fourth quarter. So if you do get that fourth quarter rally, I can see tech leading the way, and it's already knocking on the door. Then for the Russell 2000, let me get that symbol back in there. I'll learn how to type one of these days. Pretty neutral, hanging out there with the 200 period moving average, kind of smack dab in between support and resistance. The nice little support resistance zone in there. So not as much energy in the Russell 2000. And again, volume's been waning on that one as well.
It's been neutral all year long. It's been a great cash flow product and vehicle. I love the condor system on the RUT. It's one of my favorite things that we teach. Cash flow condors over there. Obviously, position sizing and all those kind of things are mandatory if you're going to trade it well. But man, what a good product for back and forth, back and forth, back and forth. Broad markets are showing a little bit more strength than that. Go to the dollar. And bringing in Coach Cody here, our Forex guy. Cody, I don't know how you evolved into the Forex guy, but you just love the product. I mean, you love trading Forex, and you've been trading it for years now, and Matt mentored you. So that probably helped a little bit. What's going on in currency today?
Right now, you have a lot of different news coming out. Well, you had the retail sales that kind of hit the US dollar a little bit. The fact they came in below expectations. Then you have the prospect of Brexit happening again. But of course, that's just the same old recycled headline. But as that deadline gets closer and closer, that headline is going to pick up a little bit more volatility. So with all of that, it just looks like the dollar might be losing some strength because of that coming too. In addition, the Fed is also the probability that they're going to cut rates is also increased now on the CME Fed Watch tool. So with all of these things kind of pushing towards a weaker dollar, that's exactly what we're seeing in the chart. In addition to that, we saw that it broke down below that 50 when it violated the original trend, sat on there for a little while, and now it's just a technical break in addition to some of the fundamental breaks. So
You know, Mark,
this is across the board.
Give me the weekly chart on this one here. And Mark, I want to bring you in here just from a technical perspective. It's fading casually. Momentum is kind of changing though, and you've got a deep pullback on the daily. The weekly chart paints a different picture here. Which one to you is more important?
I mean, it looks like a pretty nice channel, right? Draw a trend line on that top over the last couple years. Like you got one connecting the bottom. Like start of 2018.
Mm-hmm.
Yeah, I mean,
Absolutely.
That looks like a nice. I mean, this is the beauty. Cody can go on for 45 minutes on the macro things impacting the dollar, and they're all real. They're all real, and it's also very time consuming. You have your human fallibility when you're attempting to analyze those macro things, because sometimes good is bad, bad is good. And I'm not even joking on that, on the impact of a currency. Like sometimes good news from an economy standpoint can be bad news for the dollar, vice versa, but sometimes it's not. And you can have these big, long debates, or you can draw a freaking channel and apply technical analysis.
And this has been the ugliest or the least ugly of the bunch, and we've said that time and time again. And yeah, just go to the weekly chart.
That's not a small sample size. That channel's been going on for what? 18 months, 19
all year,
months, 20
all
months.
Year, yeah.
Go back to 2008. I mean, so you have a clear uptrend, clear channel. Yeah.
Well, there's a massive support resistance zone down here at 97.75 ish from previous. So I think that right now the pressure's down, but it's still. I'm not going to bet long term against the dollar right now.
No, I don't think you would. Short term, obviously, it's under some pressure. The weakness in the intraday chart, the daily candlesticks are real. And you've got risk in that Brexit news of whatever can happen, because if one of the key major currencies, a reserve currency, the pound, goes either through the deal or doesn't, it can create volatility in the whole Forex market. So there's a lot there in the short term. Long term, though, I still do like the upward kind of mobility of the dollar, and I do think it will find some support here at some point. Speaking of Brexit, and we'll get into oil here in just a second, and gold and the other commodities, but I want to talk Brexit while we're talking about currencies. Bring up the pound dollar cross pair, if you will, Noah. Day over day, we hear news headlines and rumors and stories about what's happening here. It seems like the UK might be moving towards some kind of actual contract and exit with the EU, and then not, and then back and forth. Cody, catch us up on this one.
Well, as of right now, the latest headline is saying that the EU is starting to actually come to the table more and more, because Boris Johnson was going at it in a very hard negotiation, hawkish way, where he's like, look, I'm leaving one way or the other. And before, when it was Theresa May trying to negotiate, she was being a little bit softer in the negotiations, trying to work with the EU. Boris Johnson said, hey, I'm leaving whether you want to work with me or not. And the EU's kind of starting to come to the table. And the latest news is that the EU is going to work as hard as they can to make sure there's not that hard Brexit, which is going to disrupt the Northern Ireland border. So now with them looking, let's see, my notes I put on this are negotiators are closing in on a deal to avert the hard, disorderly Brexit on October 31st. So they're really worried about that October 31st deadline, meaning that Boris Johnson's strategy of being a hard negotiator and saying, hey, you guys got to give something, because they weren't giving anything to Theresa May. And that was one of the reasons we're 3 years into Brexit now.
Mark, there's a lesson here. You get an amicable divorce is probably good for your money. If you don't, it's probably bad for your money. A good exit out of the EU would be good for the pound, because it's better for them to actually move forward with some business relationships in place. Would you buy the pound for any reason? I already know your answer, But are
Well,
you
I
playing
look
in
like
front of the
Boris at
volatility?
2 a.m. most mornings. I mean, I think that, I mean, that I just like, boy, am I looking in the mirror last night?
Mm,
Listen, here's the thing for all you doomsdayers out there, and I'm so tired of the doomsday media and the doomsday cult that exists. Most of the times things work out because it's in everyone's self-interest to have it happen.
hmm
And so, like, the amicable divorce, getting along, you know, people, when self-interest comes into play on these macro, consider whether it's Trump or China or Boris or UK or the Eurozone, you know, nobody wants an economic war. Everybody wants to prosper. There are some commonalities. So the next time you hear someone talking about the end of financial times, they're just like 99.99% they're wrong. And they're
hmm
certainly almost entirely wrong today. So something bad may happen in our lifetime, but I'm not going to sit on my hands and not trade and not cash flow and not invest.
I had no idea you were such a cheerleader, Mark. That is
Like, listen, but you know, that's what well, I mean, what's, you know, I am.
No, you're right. It's an optimistic outlook, and again, things typically, you know, there's potential for things to go bad, but I think all things being said, bullish.
Yeah,
And yeah,
market's still up for a reason.
when he first said that he was going to take the hard out October 31st, and everybody's like, "What is he doing?" And the pound just started dropping rapidly. I think he knew that he was in for some short term pain for some long term gain because
He was channeling his inner Trump is what he was doing is he's trying to be a little bit of a tough negotiator saying, hey, listen, we have to do it this way. And by the way, they put him in that position to be that person.
they did, and
That's
he's a
exactly
really
right.
smart guy. Like you look at his background in academics, he's very well versed and educated in economics. So this isn't just a gut instinct. He was doing this strategically.
You know, out of all the reserve currencies around the world, the US dollar, the euro, the yen, the pound, the yuan, or the SDR, I mean, the pound, I think, actually has some long-term prospects if they can exit amicably and put these trade deals in place and get that economy running again on strength. I'm tired of Brexit. I got to tell you, I'm so tired of it. It's been 3.5 years now. We've been sitting here wondering how this Brexit deal is going to happen. You know, rip the Band-Aid off, guys. Let's get this deal done. That's my hope. We'll see if that happens. Down to some other areas of the market. Give me crude oil, and let's take a look at this one. Marquee 50 and support is holding. It's a moving average mess on the daily. There's no doubt about it, but support is there. And you've also got a commodity here with raw demand. You're the commodity report guy at Tackle Trading. You do it each and every weekend. And by the way, last weekend's write-up was incredible. Sorry, I didn't see that until yesterday. I went through it yesterday afternoon.
And one thing, I got about 2,000 words into that article, and I love writing. I'm a much better writer than I am a live teacher, for whatever reason. And I mean, Noah, Gino, yourself, I mean, you guys are all such great live teachers, and I'm okay at getting.
Oh, don't be so hard on yourself, Mark. I think
But
you're a live teacher.
And I'm a good writer. And I was like 2,000 words in. I was like, this thing's going to take 5,000, 6,000 words. I was like, I'm holding a live class on Saturday for pro members. We're going to do a mind of the trader, talking boomerang trade, talking about this support zone, talking about what happens when you go in the money. So, I mean, when you sell a naked put, everything's great when it expires worthless. Everything's great even if it's hanging out of the price.
Yep.
The only time you get in a little bit of a, you know, like emotional state is when that thing goes in the money. And so we're going to do Saturday, 12 Eastern for pro members. Going to do a live commodity show / mind of the trader where we talk about a little bit of commodities at the end, but talking about these support levels, talking about the boomerang trade. And as you pointed out, Tim, I mean, support is support for a reason. There's a reason that phrase came about. Does anyone know who coined the phrase support?
I don't.
Charles Dow. I don't know.
Dude, it has to be 150 years old. A lot of these old terms come from those bucket shops back when people would trade literally just, you know, even in open air outcry systems, Noah. So it could just be that. Yeah. Just basic support. It's the floor, right? Price floor. But I love it. I do love the idea of support. It is holding for now. Noah, from a technical perspective, is there anything to buy here? You know,
directionally, no, but cash flow wise, sure.
Yeah.
Now, Tim, if it wasn't oil, would you have said for now?
I know
is
that
holding for now. Now, had that been something you liked, would you said support is holding? But since it was oil,
you keep calling out my bias on it, which is good.
I do, because you have a
I need
tremendously negative bias on oil.
I need people to call my biases out in life. There's nothing wrong with that.
Oh
But
no,
here's
you
the
need to
thing.
do a mind of a trader on biases. You are so good at teaching people about their cognitive biases.
But here's the thing, Mark, I do have a bull put spread on. So even though I do have a bias about the economics behind it, I'm still got a bullish cash flow trade on
Because
it makes me money. That's why.
but why?
Yeah.
What was the technical reason that you have a bullish, even though you have a negative bias against oil, why do you have a bullish cash flow trade on oil? What's the technical?
Well, it was high probability. I had deep out of the money. I had support underneath me. I had demand for a commodity. It's a commodity, not a company, which has different implications. And I've traded it for 12 years. That's why, I love crude oil.
I love crude oil.
Yeah. I mean, crude oil is the number one commodity in the world for a reason, and there's always going to be that natural raw demand about it. Disclaimer, if it does break below support, look out.
And that's going to be, and that's going to be the subject because there's a couple things that's going to be the subject of this thing. Like when things do break support, when you do get in the money, and we'll have it up on the calendar at Tackle Trading, noon Eastern Saturday.
Mm-hmm.
So if you are, if your wife or husband wants you to do yard work and that fall cleanup and you don't want to, guess what?
Have I got an excuse for you?
You got an excuse. I gave you excuse to get out of fall cleanup out of your yard.
Say, honey, listen, the boomerang strategy is real key for
It
our
makes us
retirement
money.
account.
With my boomerang trades, I can pay someone to do all this yard work. There's your line. Listen.
And I was going for a joke, but I will make a key point here. It's one strategy I love in retirement accounts and cash flow accounts. Whether it's a margin account or an IRA, Mark, I love the boomerang for both, because of the way that it works in a retirement account. You have to have the cash secured. So you're already putting the cash out to buy the product anyway, and you're hitting some ROI targets, which are reasonable in those 2-3% ranges. So I like it for both. I do. Stocks, guys, let's get into them. A lot of companies I want to look at. GM, they keep talking back and forth about this auto workers deal. And, here's the thing. Obviously, I believe that unions should be able to definitely fight for their rights and workers. The market doesn't know what to think about GM. It's been back and forth now for a while. Stock is going up. Earnings are coming up. I don't see anything to touch here in any regard. It's been dominating headlines. Do you guys even trade GM?
No, I don't. But if I were looking at the chart and trying to pick a strategy, it would be a neutral strategy. Cash.
Yeah, I mean, if you go to weekly, I mean, you can see it on a daily, but if you go to weekly, it will stand out a lot more. I mean, people that have been cash flowing through dividends and covered calls, GM for years and years and years and years now.
And that's a 1% dividend too. I mean, it's not, that's nothing to sneeze at.
If I'm going for a dividend, give me AT&T. Give me Coca-Cola.
I know. You're not wrong.
Making cars is hard in 2019, which is why look at Ford Motor. It's not just GM.
We don't talk about GM very often,
no,
but there are people that, I mean, it's just and what's the reason? I mean, like in all of the thousands of choices, Noah and Tim, like we got choices. That's one of the great advantages we have as individual traders.
That's right. That's what gives you an advantage. Yeah.
You don't have to bet every game.
If I'm going to play a dividend company,
but why don't you guys? Why don't you?
Even if I want some type of company like GM, I would pick something else. That's why. Like AT&T, Coca-Cola, an energy company, ExxonMobil.
So is it dividend rate? Is it?
Sure. Dividend rate, stability, sector in the market. Auto markets have been very, very difficult. Ford Motor, GM. Look at Tesla. Can you
say for a certainty, either one of you, that GM will be around 30 years from now?
Got it. Didn't they almost go bankrupt after the last crash? I mean, we had to bail them out last time. No, I could not say for certainty that they will be around in 30 years. We don't know what the future of even transportation looks like, quite frankly.
What about you, Noah?
Well, I think cars are going away. I drive them while you can.
With your father Stockaducci and your what was your other Sigmund one?
Stockman Freud.
Stockman Freud. You need to come up with a Nostradamus one. You need to come up with and no, you're so good at
no Stockdamus. I don't know if that works.
No, you come up with think about it. but you need to come up with a
How's that?
Nostradamus stock investing name.
The year is
Ah,
2050.
Yeah, no,
Brexit talks ongoing. Trade deal almost inked.
God,
Cars, they fly.
you just
we're
reminded
never
me of
getting flying cars.
that old bit on Conan O'Brien in the year 2000 where he'd wear the hat.
Oh
and
yeah,
the
that
whole
was
thing.
great.
That was fantastic. All right, moving on to other companies here. No more on this chart. Give me Mickelson, ABC, and CHS or CAH. Cody, come on in here for a minute because I know you dug up some of these news stories, and also you've got a chemistry background. These companies are being sued over their opioid-related products. You
Wait,
know, and obviously
which symbol am I looking at?
MCK.
MCK.
Well, these are all
Mickelson,
distributors.
correct. AmerisourceBergen, ABC. And then Cardinal Health, CAH. They're distributors, and they're talking about settling an $18 billion lawsuit, but they're actually jumping up here today. Tells me that they were cooked in to maybe even have to settle a higher lawsuit. Investors were concerned about maybe having to pay out more money than that. This could be good for the company's stock price. Cody, what was this news all about here today?
It comes down to the opioid crisis. So with opioids, and I had shared a video and with you and Matt, just kind of go through it. Now I can find the link. It's not by us. It was just on YouTube. It goes through the strength of opioids and how as humans we all think that we just think painkillers. We like putting things in just big easy boxes. We think painkillers. But when you start looking at the comparison and relative strength of all these different things, like you hear Percocet, Oxycontin, hydrocodone, your simple Tylenol, like your acetaminophen, your aspirin, fentanyl, when you put all these together, like they're all painkillers, yes, but the range and the strength by which they all change is one of the craziest things that is hard for just the public to understand. So when you had doctors that started jumping patients up from an Oxycontin to hydrocodone or something, and they started just bumping that up, they weren't just bumping up the dose by changing the drug itself. The relative strength of the opioid started going exponentially higher. We're talking like from a 1-to-1 ratio to like a 200-to-1 ratio, like crazy amounts that were being taken up. Now, fentanyl was one of the main things that started when it was released. It was such a high jump that there was some mistakes made by the prescribing doctors that they should have been more educated as to the strength of the drug they were giving out. After that got pulled from the market, you had all of these patients that had rapidly obtained a opioid addiction, and they started turning towards anything they could because your pain threshold rises to where even you're at a normal state. Like all of us are in a normal state right now. Someone who has an opioid addiction would feel as if their nerves are on fire. They're in such tremendous pain. And what's basically happened in this entire lawsuit, so there's all the quick history background of how the opioid crisis happened, is that they were not regulating the amount they were getting out. As the doctors were giving out more, patients were demanding more because of the addiction that was building. These companies just kept saying, hell yeah, my profits are going up. Send, sell,
Yeah.
And they just kept pumping it into the market without ever thinking about the ramifications that were going to be affecting the patients themselves. And so now this is where it's coming down to. I think that, like you said, it was kind of baked in. They were expecting maybe a bigger lawsuit. I know Johnson & Johnson's going to being hit for that as well as the actual creator of Oxycontin. I forget the name of that company. They actually filed for bankruptcy due to what they're looking to have to pay out. So this is a big attack, and actually this is my field. So I'm very happy to see the opioid crisis kind of being attacked that way.
Yeah. Well, I mean,
and there's more things that can be done too, like patient. And if anyone that's struggling with this, there are counselors and there are facilities. Like you don't have to go to a full like rehab facility, but just understanding what's going on and being able to get that help out there, help people who are this wasn't just crack addicts going out. Like this is normal.
No, it's mom and
mothers and
pop
fathers.
who
Yeah,
had a surgery on their knee that were overdosing.
exactly.
100%. I mean, and these companies are accountable to that. Obviously, a settlement could be a good thing, not only for the company, but for the consumer who might be able to get some money back from that. But the reality is the market actually likes it. I haven't touched these companies in a while. Pretty complex storyline there. There's no doubt about it, but the stocks are jumping up. Market would be a complete stay away from me. I hear lawsuit. I hear 18 billion. I look at charts that don't have clarity. I've got earnings coming up. I'm just not touching. Right.
Reasonable.
Yeah. All right. Moving on here, guys. Got a lot I want to do here with the rest of our show. We're going to be here probably about another 10, 15 minutes. I do want to prep Netflix earnings, quick
Now,
earnings.
is there a correlation with all the tangents I do and you not getting through all the prepared material you have every show?
Hey,
Oh,
listen,
absolutely. Which
100%.
yesterday he was a hawk on it. He was like, no sidebars, no sidebar. He kept cutting everyone off. It was no sidebar. Even during the meeting, he's like, no sidebars.
It was no sidebar Tuesday. It's sidebar Wednesday. All right. So wax on, wax off, Cody.
Well, let's
Sometimes you gotta-
prep Netflix, and then I got a fun game for us.
Sounds good. Real quick on earnings roundup, though, I do want to talk about a couple of companies that did report. Bank of America, more bank earnings actually was up nicely. Little 2% bump up into resistance, but I do like this one, covered call, if we can get a breakout. It's been a good candidate for cash flow and neutral strategies for a long time. Got to break resistance for that. Abbott Labs down ABT. 3.1%, kind of holding the 200 period moving average. One thing I love about earnings out there, Team Tackle, is when a company has earnings come and go, now you know you got 3 months in front of you where you don't got to worry about it. So there's a lot of times I add stocks to my watch list post earnings, Mark. And this one, it's not a short-term signal on the daily chart, but I loved that weekly chart. Back that out there, Noah.
It's a pretty good looking weekly chart, isn't it?
There's no doubt. If you could break that higher wedge, dang, that's a good looking chart.
Yep. So that is a nice, right in the channel. This is actually a really good exercise in multiple time frame analysis where you can kind of see that potential reversal pattern in here. You want to see that break back out probably above 84, 85, but nice looking setup.
Yeah, I'm going to kick it into a long-term watch list and continue to evaluate it. And that's why I keep watch lists for those different reasons. United Airlines was up 2%. MGM was up 1.5%. Outside of that, not a ton of companies that were grabbing my attention. After the bell, Netflix, IBM, United Rentals, and more. And then some tomorrow as well, like Honeywell. It's going to be a big week for earnings, but even next week is bigger. We're just getting started in earnings season. We promised the people here, Noah, we would prep Netflix. And what I want you to do is give a quick 5-minute analysis on what the earnings are. I'll be right here with you, obviously doing it with you. And then let's look at like inverted fly or something like that. See what we can.
I'll tell you what, last night in the coaches show, we did a short strangle setup.
Perfect.
That. So yeah, I mean, as far as we got earnings coming out, we know what, it's coming out in the morning, or so we got it's after the conference call tonight. So pretty neutral. Otherwise, it's down below the 50. It's up above the 20. It's, coming off of a bigger downtrend from their last earnings announcement. And they're pricing in, we talked about this at great length last night in the coach show. They're pricing in about $27 up or down on that. That's based off of those short-term options. And, the idea, well, $27 up means, hey, you might see a gap out here, towards 310. You might see a drop down towards around 258 or so towards support. So you've got, kind of an identifiable range where you think the price is likely to stay within. But again, that outcome is unknown. You look back at their previous earnings announcements and you try to get an idea of how much it moves. So, here on the previous earnings announcement, you had a bit of a surprise and a little bit bigger than normal gap. You go back to the earnings before that and you had a really modest move. I mean, hardly any move at all. Not much gap that's really visible on the chart. And then the earnings cycle before that, it had been on a big tear prior to the earnings announcement. And then on the actual earnings announcement itself, again, relatively small gap. And then back here on the far left, you can barely see it, but there's a small gap. So they're pricing in $27. This gap back here was, from 360 down to 326. So it went a little bit more, went closer to, 35 points. So will there be a surprise? I don't know. I'm not Martha Stewart. Nobody's giving me the insider information, but you can play the probabilities on that and you can play it bidirectionally.
Sure. Short strangle, huh?
Yep. So we set up a short strangle. You can see the red lines on the chart. We went long-term, did Januaries, sold way out of the money calls, way out of the money puts, based off of the implied volatility being quite high right now. So the implied volatility is high. They're sitting out at 54%. We expect volatility.
I get you. I get you. Why not condor it though? I'll push back a little bit. I
you
love.
could.
I mean, why
Well,
not condor?
why
it to
not
take
condor?
some of the theoretical risk out.
I've got one reason for that. This specific strategy we're working on with short strangles.
It was playbook rule time for a short strangle.
Yes, but no, for a more expensive stock, I would normally consider the condor because that has fixed risk, whereas the short strangle has open-ended risk.
Yeah, a couple of things. Number one, and I'll tell everybody out there, type in the word Vega in the chat, Vega. And kind of an easy pitch back to our playbook. There's a ton of Vega videos and strategies with rules on them on how you can play them. Volatility trading pre-earnings, where it comes crashing down, and Seth, the simple answer is when you approach an earnings analysis, you have to have the mindset that it can go one of two ways. You're either going to do bi-directional or short strangle type mindset. Either you sell volatility or you believe in the gap, right? And from what Noah was building, I know Noah's bias. He loves short strangles. Correct, Noah?
I like short strangles.
I mean,
on a more expensive stock, I would probably do the condor.
I know. We'll talk about that.
Yeah, no, I do love them because they can yield a nice little return very quickly.
Well, not only that, out of 100 trades, if you do short strangle or condor or sell the volatility on the volatility crush, you're going to be right a lot. So you can build it as a primary strategy when it's well designed and you know how to do it, right?
Right.
What are the deltas on those ones, by the way?
Oh, we went really low on the deltas. We went down like deltas of 12, if memory serves, from last night. We went long term and we had deltas of 8. We went low, under 10.
Mm-hmm.
So yeah, deltas under 10. And we did that to get outside of the resistance and down below key support zones.
Is the market pricing risk in according to what we're seeing? 10% gap is a pretty big gap, but Netflix does that quite often. I mean, it's not been, quite frankly, I don't think they priced that high recently. Yeah,
I mean, if you look at, let's bring in a little bit more history on this, just so we can see. Let's see, we got 2 years daily. Yeah, we're there. Mm-hmm. So yeah, we've got that. Let me zoom out so you can see some of that history. I mean, it does have a tendency to gap. From time to time, you'll get a big gap. Are they pricing in compared to history? It's been priced higher, but it's certainly priced higher than the last couple of events.
In July, we had a huge gap. In April, we did not. In January, we did not. Even in October, we didn't have a huge gap. It ended up moving after the earnings quite a bit, but it wasn't like a 25% gap or anything like that. Last July was not a 10% gap. Last April, two years ago in April, was not a 10% gap. I think maybe the answer to your question, Seth, is that the probabilities are telling us that they might be overpricing risk, which is where that implied volatility of 55% comes in. Now, whether you want fixed risk or unlimited risk and have a more pure play comes down to trader design. There's no way for us to answer that for a trader, Noah. I mean, there just isn't.
No, and for me, a lot of my confidence in setting up a trade like a short strangle is just knowing how to hedge it. So if there were a surprise, I have a game plan already, in place to help me manage that risk.
And by the way, and this is really, really key, there's a reason why Noah went out 90 days instead of 30 or 7. When you sell options on a volatility crush, Noah, you want a lot more cushion. And by going further in time, you allow yourself to create a bigger window and still get a credit. Because if you did that same trade on a 7-day window, it's more gamma sensitive, right? And we're going full option nerd here today, Mark. There's no doubt about it. Tossing out words like gamma and fixed risk and all that kind of stuff. You're on mute, by the way.
No, I mean, and for a new trader, the only time I don't like it when you do that, because I enjoy it personally, but there's a lot of terms that people might not know. But
well, that's where you get over the tackle trading glossary.
Well, that's why send me an email. I'll get you a 21-day free trial to learn all of those terms. Team at Tackle Trading. So you get an extra 6 days if you do it today. Normally we do a 15-day. Send me an email at Team at Tackle Trading. I'll get you a link, get you set up so you can learn all this stuff.
And there's a phrase I use all the time in education, teaching traders, and I want somebody in the chat to write it in there. Trade what I know, practice what I don't. Okay. You should not be trading anything live, including a short strangle or a condor, anything on volatility, if you haven't proven that you know how to make money doing it. So you practice it, right? No, I mean, you put it in paper trade, and maybe a good way to practice Netflix is write in a paper account and build this in.
Yeah, you got to practice it, and I think honestly, you have to practice a trade. I don't know, 20 to 50 times, I think, before you really got it to where you understand the mechanics. You got to see what happens when the trade goes good, particularly with an earnings trade, where you're speculating on that. You have to see what happens when they go good, bad, and ugly. And it just literally takes repetitions, like at bats in a virtual account, to understand the nature of it.
Whenever I approach earnings analysis, I always think about it very openly. I try to make sure I'm not biased coming in, saying I'm going to either sell or buy the volatility. But when I see Netflix up at the 55% implied volatility mark, and you can create this kind of window, and it normally does not gap 10, 12, 15% every quarter. Yeah, I think you're on the right side of that equation, Noah. The only debate, again, like we've been talking about, is either short strangle or condor. Love the analysis, though. Cody, you had a game for us. Let's do it.
All right. So today's game, Wednesday is always going to be our new game, our new segment. Whatever I decide to try to come up with and put forward for us on a Wednesday is what Wednesday is really going to be. So not really a continuing theme, other than it's just going to have some sort of game or segment as a part of it. Today, we're going to be doing an idea that we got from, it was either last week or 2 weeks ago, when we did the Would You Rather, and I asked, would you rather do Apple or Microsoft? So we're going to do something very similar. The game today is called Celebrity Deathmatch. And what I'm going to do, and of course, there are so many companies I can choose from that the list is too long for us to do one time. So this segment's going to continue multiple times. But I'm going to pick two large companies in the same sector. And I want you guys to just kind of talk through of who would win, who's a better company, who should we look to invest in. So it's not just short-term trading, because I know that sometimes I can pick a chart, you'll be like, well, that one's bearish, I'm going to pick this one bullish. We're looking long-term at these companies to see who would win, let's say 10 years out. And that's what I'm going to do. So I'm going to pick a handful of companies here, and we're going to get started. And I'm going to start off. There's no winner.
We're going long term on this.
We're going long term on this.
10 years, I heard, right?
10 years.
Right.
We're looking.
Give me monthly candlesticks. I mean, if we're going to do this, let's do it right. Let's lay down the.
I like the way Noah's setting this thing up right here, where you can put the two charts side by side. I like this.
I like it a lot.
10 years, we'll go monthly. All right.
Monthly candlestick. Do computers use monthly candlesticks, Mark? They do.
He's on mute, but I think he does. I think they do. I think he was saying
Of course
yes.
they do. Computers are smarter than you. They process it all.
Oh.
All righty.
Tim versus the computers. All right.
All right. So
I know which side I'm betting on.
I'm going to start off.
So
with
is that our first celebrity death match? Tim versus the computers?
Tim versus computers? Oh, I'm going
I choose the computers.
Yeah.
I take anyone. I take any computers over a person. Maybe not Will Smith. He did beat
I
iRobot.
would too. Like,
All right, let's start off with McDonald's versus Yum Brands.
Donald's.
So what brands are in Yum
Yum
Brands?
Brands.
And are we all going, or are we taking?
Yeah, this is
Yum
more,
Brands
this
has
is more just an
Taco
open
Bell,
discussion.
KFC, Pizza Hut, I believe. I mean, are those the big three they have?
Those are the big three. Let's see who else they have. Taco Bell, KFC, Pizza Hut.
See, I know my fast food.
Long John Silver's, Wing Street, which isn't that just part of Pizza Hut?
They own Long John Silver's. By the way, I thought that company was out of business until I went to Lawton, Oklahoma to see my daughter at basic training graduation. And there was a Long John Silver's right there. I can't imagine.
And apparently they also own AW Root Beer.
Give me McDonald's. Although KFC growing internationally, I got to tell you, when you go to Asia, there's KFC everywhere. I know there's McDonald's everywhere too. But
it's growing so big, they split off their Asian division. Yum C.
Oh, is it Yum C?
Yum C is the ticker symbol.
I might take Yum C over Yum actually then, because they're both incredible charts. Gosh dang.
Well, look how similar those charts are. I mean, honestly, look at they follow the same general cycling pattern. I almost got that out there.
Yeah. I'm going to take This is a coin flip for me. Mark, I'm going to defer to you. You're my fast food guy. You've got the McRib on the left. You've got McDonald's staying power. You've got the Big Mac. You've got a brand recognition there that's incredible. Yum's got diversity. So either you go with the one, the blue chip, or you go with the portfolio of all these different companies, the KFC and all that, the Taco Bells. Mark, I'm going to defer to you here. Which one?
So what's my judging criteria?
Which one do you want to own for 10 years? Who's going to win?
I got my answer.
Well, I'm not, listen, I had 2 McRibs last night, so I vote McDonald's.
Noah?
McDonald's has a much stronger dividend. So McDonald's.
I'll take Yum Brands. I talked myself back through this, and I'm going to actually go with Yum Brands. I think the diversity in the portfolio, maybe McDonald's gets sued. Maybe they fall out of favor. Maybe those McRibs actually are made out of whatever. I don't know.
The Soylent Green's made out of people.
Sure. Who knows? I'll take Yum Brands. Next one. Let's roll.
All right, let's see. Next on the list, one that's kind of compared quite often is Coca-Cola versus Pepsi.
Are we just going to like taste test here, or we?
Oh, yeah. There's gonna be a little bit of theme here.
Coke, easy.
Why?
Okay. Because
you're not gonna give Pepsi a chance.
Because you can put rum in it and it's better. That's one reason, number one. Number two, it has better international brand recognition. I think out of the Pepsi challenge, Pepsi's fine. I actually like the taste of Pepsi, but Coke's the play if you're looking for a stock.
Noah, any arguments? Any rebuttals?
I have no
we going Coke?
arguments, except for they both pay a nice little dividend.
Which one is going into CBD infused colas first? It's got to be Coca-Cola, right? Who's going to?
I mean, they had Coke originally.
That's right. They're not afraid of putting stuff in that thing. Mark, Coke or Pepsi? Mark has a Coke. He's lifting.
I go with Coke.
Yeah. Yeah.
All right. Well, see, I wanted to see if I could pick something that would make it to where it wasn't just the bigger brand is always our choice. So let me see if I can mix it up a little bit. And I'm going to say Oracle or Salesforce. So they're slightly different companies. They're both kind of in that information technology space, online platforms, cloud-based software. So, but their business models are slightly different. So this one's a little bit more
different timelines on their, corporate culture as well. I mean, Salesforce is relatively a newer company compared to Oracle. I know both new, but Salesforce is not as big as Oracle. They weren't, I don't think.
How old is Larry Ellison? He's got to be like 100 by now, doesn't he?
Yeah.
Whereas Benioff's a relatively young man.
Oracle
was
is
it Oracle who Benioff originally worked for?
He did. Yeah. He was a vice president at Oracle at 25 years old, and he quit the job, which is incredible if you think about it. I'll take the younger CEO, Benioff. He's grown something incredible. Every Fortune 500 company that I've evaluated has a department on how to use Salesforce automation. Okay. So it's the kind of company that's penetrating. It is definitely there. They're growing. They're a growth stock. You're paying for a higher PE ratio. But on a 10-year timeline, I think that I would take Salesforce. No dividend on Salesforce, dividend on Oracle.
Yeah, no dividend over there on Salesforce. And it's kind of it's up there right now. Like you said, you're paying for that growth. You're paying, it might be a little bit well,
I think the conservative investor goes with Oracle, but if you're more aggressive and you're looking for growth, then you go with Salesforce.
Mm-hmm.
So what are you going with?
I'm going to defer to Jimbo. Jimbo works in this space. My man Jimbo out there, he knows all about this. Jimbo, which one would you pick? Let us know in the chat. Next one, Cody.
All right. Let's finish off with, and again, no, I don't want y'all to do the same thing. Let's do PM or MO.
2 cigarette companies.
Yes.
No, I'm trump carding this. Give me Lyft and Uber. Get them up there.
Come on.
No. Listen, we're not going to argue between 2 cigarette companies and the future validity of it. But everybody uses Lyft.
But they could both go to 0.
Correct. So that's both of them. Similar analysis. Now the charts are same here. Pick one, Lyft or Uber. Cody, I'm bringing you in. I'm flipping the roles here.
All right. I'm gonna go with Lyft, and I'm taking Lyft for a number of reasons. One, I've always seemed to have better service with Lyft, although it depends on where you are because people can go back and forth all day on which one's better. Lyft always has cheaper prices. I also noticed that. So it's just a simple consumer. If you're using this thing multiple times a day or even throughout the week, being able to save $5-6 here per ride, it is a benefit. Yeah, I'm going to go with Lyft over Uber.
Noah?
I'm going to go with Uber because nobody ever says, we'll just Lyft it. They say, we'll Uber it.
You clearly do not Lyft or Uber it then, because Lyft, that's true 5 years ago.
Is it not?
It is not the same anymore. Lyft is killing them. I got to tell you, where I travel, airports, and then to hotels and that type of travel, Lyft is better. They're tied into Delta Airlines. So if you're a Delta user, you get Delta airline miles for riding on Lyft. And if you do business travel, they categorize it separately. Lyft is, I think they're a better.
I'm just going to go ahead and change my answer then. I'm going to go with Lyft.
I don't think it's
I
close.
was easily
I think what they were going for is, take a Lyft, but they haven't really got that phrase to stick.
Yeah.
I mean, because we could always just Bing it.
Correct. Correct. Now here's another one. Let's see here. Now I got a better one. You see this? You messed this whole game up.
No, I have a huge list. I was just trying to choose from them as I was.
Give me McDonald's or Planet Fitness.
See, those are two different spaces.
You got to put people against each other's odds. Like, would you rather go to the gym or go get those McRibs, Mark? I mean, that's the question, right? McDonald's or Planet.
Why do I have to choose both?
I guess.
Why can't I be on my exercise bike with two McRibs, one in each hand?
The reason I don't ask Mark these questions is every time I've done any type of, hey, choose this company or this company, he always says, I'm an investor. I can choose both. And it's like, yes, we get it. But if you had to.
Oh, I love it.
So he never wants to play these games. So I didn't even ask him this time.
I actually had fun playing this one, Cody. So very good job.
I reject binary games.
You don't like it, do you?
But he creates binary games.
Well, see, it's a lot more fun when you torture other people than you get tortured yourself. So.
That is our show. We've got to wrap this one. Guys, we'll be back tomorrow with Theta Thursday. We'll also have, a full crew of coaches here as we always do on a daily basis. If you are new to our show, a couple things I want you to do before you leave. Number one, sign up for pro membership. This is one example of what we do on the pro membership. We have shows and webinars and blogs and courses and all kinds of stuff. And we just released our new playbook for pros only. And Mark has a very special offer for you. We normally do 15-day trials. Okay. That's a standard offer we give anybody who ever wants to try tackle trading out. But if you email team@Tackle Trading, let's say by Friday, Mark, that you can get a 21-day trial and Mark will help get you set up. Okay. Team@TackleTrading.com. Get started on a pro membership, get to use the playbook, all that kind of stuff. Number two, give me a thumb, a subscribe, and a bell right here on our YouTube channel. And Noah, did I miss anything? What do we got going on programming wise?
Well, we've got the Step System Mastermind group tonight, and we've got the Cash Flow Club tomorrow night, and I'm going to be hosting both. So come on out. We're going to make those extra special for you.
It is the week of Noah. Noah's doing lounges and halftime reports and nightly shows. Noah, you are a machine, my friend.
Well, hey, this is what happens when my wife goes out of town and I'm left unsupervised.
Everybody loves Coach Noah. We appreciate the work you're doing. And Mark, by the way, you are a great teacher and you are a great writer as well. Those aren't binary choices I have to make on whether or not you're better at one or the other.
Well, I know what listen, we all have things we're better at than other things. I don't need, listen, my ego is doing just fine, Tim, but thank you very much.
It's just a compliment. C'est la vie. All right, guys, we will see you tomorrow, Thursday, in our halftime report.